perfect. Okay, there we go. So we are now recording. So yeah, like I was saying, basically, I was just mentioning, we are gonna go over those few things and how to look at the price action as a whole. So yeah, overall, what I was basically saying is that I think this is the most easiest thing that you can basically learn in terms of looking at charts or price action. And let's say you don't want to really learn charts that much, I would still advise that you learn how to just look at rejection zones. And what are rejection zones? I'm going to go over that. But to quickly just give you a brief idea what rejection zones are basically these two categories. So this one, that one, like that little area up there, those are like consider rejection zones. Okay. So when you learn how to locate them, find them, or put them on a chart, then of course you're going to improve dramatically in your charting and all that kind of stuff. So with that being said, the first thing first, like I said, you always want to use tradingview.com. You can use Webull, you can use I don't care what you use. I'm just saying I personally recommend TradingView only because of course you can have all these wish lists or whatever it is. But my thing is like if you're gonna use something else, then you can do that. But I would just always suggest that you use TradingView because it's the most easiest way. Like has all the tools that you need. I don't know any other servers. I'm sorry, any other like thing that provides these kind of tools. So if you want to use something else, you can. But next topic. So first thing first, I did go over this in the previous webinar, but like I said, I'm gonna get a little bit more detail into this. So basically, as you can see, your resistance is also at the top. All right, and your support is also at the bottom. Okay, so basically what you want to know here is that in order to have a valid resistance, you must always have at least two touches. All right. So if you take a big look into this picture, or rather we just go right into this. But yeah, you just need at least two touches. And as you can see here, if I zoom in, just like that, you can see how price hits at least twice right there. And then it kind of makes a resistance zone, okay? And then of course, if you just draw this across, there's technically still resistance. So if you put this green line and stretch it across a little bit further to the left, you're going to see how there was at least two touches right down there. So if you draw this across, you're going to see a zone, or rather a support. So a zone is the same thing as a support, and a support and resistance are also the same thing. Resistance just at the top, and then support just at the bottom. And the main thing here is that they can literally just flip. And what I mean by that is basically, let's say this price right here, meaning like these lines came all the way under, then retested this line, this becomes now resistance. So that's what I mean, like support, resistance, they're technically all the same thing. But the way you separate them is just saying support on the bottom, resistance on the top. Resistance is your roof, support is your floor. All right. And in your zone is just basically a general term for using a possible word price can reject. So that will be for support or resistance. Okay. Trend lines. So for trend lines, they can use to help you identify trend or rejection zones, or you can use them for the crossfire method. It's just something I made up. Okay. And I'm not going to say I'm the originator. No, I'm not. I'm 22 or something. So no, I'm not the originator. I just said it's just something that I just randomly do to get potential, rejections on it. But we will go over that to show you what I'm talking about. So with that being said, as you can see here, your resistance is all to the top. So if you look at trend, you chart using trend lines. And is the screen clear? Okay. Oh, it froze. It's good now. Is it good? Okay. Good. Okay, there we go. So where did I cut out? So let's say I believe. How long did I cut out? How long was I out? Let me just go ahead and explain that again. Okay. A minute. Okay. Um. So okay. Okay. So let's say, did y'all hear me when I said anything about entries within trend lines? Because no. Okay. Did y'all hear me say anything regarding using support and resistance as your support zones or resistance zones? Okay, so leaving off there. Okay, so basically, you want to learn how to use those as zones possibly. Okay, and then with that being said, it can be horizontal, vertical, or whatever it is, right? So I'm also going to show you how to enter using your support and your resistance zones. Okay, usually that's week 3, but every week I'm just going to try to show you how you can enter using that specific method alone. So if I'm just teaching you market structure, then I'll say how we, enter this just based on market structure and all that kind of stuff, right? So that's cool, whatever. Okay. So if, like, for example, if we're using a trend line, this is going to be a perfect example of how you use a breakout. So the first thing first, you see the first retest and then price falls out. Okay. So that is just a simple way to look at it. And of course, you can just search up trend lines, Forex, and it's going to show you like a variety of examples of how they use all this kind of stuff. But of course, let's say you want to go back and watch this webinar, you can. But like I keep telling, I'm going to remind you again, if you are going to learn charts from anyone, make sure that that specific individual trades Forex or used to at one point, okay? Because they technically tend to be the better ones at charting than a regular stock individual who probably just does support and resistance, okay? So we are going to go over a random stock. Okay, so I'm just gonna look at something that's pretty appealing. Wait, did I also mention chart patterns on week 1? Or let me check the Discord real quick. I don't know if I'm supposed to mention chart patterns on this week, but let me take a really quick look at it. So where is the announcements? Okay, so announcements. Alrighty. Trend candles, entries, patterns. I'll go with patterns. I don't know if it's supposed to be this week, but I'm going to go with patterns. Okay, so this is what we call a breakout pattern. That is something that you will have to. These notes are also in the chart teacher place, so you can just go back and like scroll up. You're going to see the notes where I said this bunch of chart patterns, so you can take a look at that. But so one thing I'm going to show you is let me take a look here. So like I said, these are what chart patterns are, okay? So these Forex patterns also apply to stocks, okay? So wherever you see a chart, it doesn't matter. It's all going to be the same thing. So if you take a look here, you're going to see a variety of patterns, all right? So for example, if you see this was what we call like, a breakout wedge or just a breakout in general, which is basically what that is, right? So if you were able to identify this, you can say that you want to enter at the breakup. So basically, let's say that you saw it breakout at 12. Your target would probably be like 13, but in the money, okay? So you can see how price basically broke out tremendously, then shot up, and then just came right back down. You know what I'm saying? And that's probably because of price feeling, which I understand why it came back down there, but that is not for this week. But yeah, so chart patterns, that is basically something you want to look into. I'm not gonna go over every single one of them, but if I notice one, then I'm gonna, point it out. Okay, what's that? Oh, so yeah, so basically this is just something you want to see. Like you're gonna see head and shoulders, you're gonna see, breakout wedges, you're gonna see bullish flags, bearish flags. That is something I'm probably gonna notice, point out to y'all a lot. But we will go from there. Okay, so starting with trend lines and no, starting with support and resistance. Okay, so we are probably going to go with let's see if there's which chart do I want to go over? Let's just go over. Let's go over. Let's go over this. Okay, so using can y'all see the screen now? You can see the screen. The screen there. Thumbs up. Y'all hear me? Okay, good. Okay. So we are gonna go over TTCF. So basically, like remember I told you, your first thing you want to look at is when you look at zones, you just want to see where price hit its head or its feet several times. Okay. So like I said, my goal is just to make sure I put it into kindergarten terms. Okay. So the best way I can explain it, the easiest way I can explain is basically just saying where are they stomping a lot? Where are they hitting their heads a lot? Okay. So of course, if you just draw this right there, you can kind of see multiple times they hit his head. In other words, resistance. Okay. But when you are looking at current price action, technically, this doesn't matter. All right. But as of right now, we're just going to look at the thing as a whole. All right. So with that being said, that's where price technically hit its head several times. So we got the first two hits. In other words, we have our first resistance zone. Okay. And then we see our second potential rejection zone, which is right there at possibly like 22. Okay. Right there. So this thing keeps on. Let me just think it out the way. Okay. So yeah. So basically, as you can see here, you're gonna see how if you put this the first rejection zone. Okay. Highlighter, the first rejection zone, then the second. Okay. And then you're gonna see how price came up, rejected, and then rejected again, and then broke through, then came back and acted as a resistance. Okay, so that's what I mean by when I say support or resistance are the same thing, basically they can just flip and switch. Yeah, go ahead. Let's see. So directed towards you, Alan. Is this more clear, or you just want me to speak louder? Because I definitely know I am definitely slanging with my language right now. So, but it's more clear for you if you don't mind typing it out. While wait on his response, I will keep on moving on. Okay. Yeah. Okay. So like I was saying, this is basically where you're gonna see how support and resistance like switch over each other. Okay. So and what I mean by that basically is that when price basically breaks this support, comes back, retest. Now that's your resistance. Okay. It's no longer support, it's now your resistance. Okay. So that's what I mean by they are technically the same thing. It just depends on where price is at that current moment. So on December 22nd, or rather December 29th, we saw that price rejected, went up, came back down, rejected again, went up, and broke through that support finally. And then in March 15th, it retested as a resistant. So no matter where you draw this line, you can draw 1,000 lines all throughout your chart, okay? In some way, if you do them correctly, there will be some type of initial reaction, okay? So if you're able to identify your zones, like even if you, even if you find these little tiny zones, I'm talking about like this one. So you see that little 2 area that rejected. If you're able to take a look at that and say, and draw it across the map, you're gonna see how you technically had your first rejection around then and price shot up, rejected again, didn't broke through. Okay, but every single zone does not matter. Okay, so you also want to look for what that matter the most. So, but like I said, the thing that matters most is current price action, and that is basically this area. So, with that being said, since this is the most current area, and we're currently looking at what is it? It's currently April, I think. Yeah, so it's currently April. Basically, what you want to do is you want to go to your chart. Okay, so when you get to your chart, you can either go to the daily, you can go to the well, you also want to start the monthly. I'm sorry. When you start the monthly, you're gonna get a big outlook. You can see that this is obviously in an uptrend. All right. But the monthly won't show you much. So obviously you're gonna go down to the lower time frame. Okay. Can you see me? Can you hear me? Can you see all this kind of stuff? Share screen. Yeah. Yeah. I don't know what's going on either. Okay. There we go. There we go. There we go. There we go. Okay. Okay. So the monthly won't show you much. Okay. So basically, you always want to go down to the lower time frames, and it will basically. No, this is a different one. Yeah, so the monthly won't show you much. So basically, what you want to do is go to the lower time frames. So you go to the weekly. The weekly won't.
Hey, so Nez got a notification from his apartment complex, and I guess there's something actually wrong with their Wi-Fi, so it's just causing him to go in and out. So that's why he keeps going in and out. So I'm gonna see what he's doing. He said that the apartment complex is having Wi-Fi issues right now, so we'll see. Let me ask. Wait, can y'all hear me? All right. He said he gonna finish the webinar though, so And doing another one. He said he will finish this one and then he's gonna do another one for y'all. So due to the error on his side. So I guess we'll just give him time to get back up in here and so y'all have 3 webinars, all taught differently. Yeah, Michelle, that's why it was just like Wi-Fi issues on his end. So it's like it's causing his stuff to go in and out. Did the meeting kick him out? I think you should use your phone. Let's see.
Okay. Let's see. There we go. My bad. My fault. My fault. Who's the owner of this webinar right now? Because I need you to give me access to Jeremiah. I think you have to no, never mind. Okay, it's me. All right, perfect. So share screen. Desktop 3. Share current recording and yeah, we're good. So like I left off, basically what I was basically saying is which chat? Let's make sure I can see the chat. Okay, there we go. So basically what I was saying is that you always want to make sure that you're going to the lower time frames because they're going to represent more candles. So if you take a look at the daily and you look back in time, there technically isn't necessarily any rejection zones here. I mean, there are, but when you first start, no matter who you are, most times you're going to try to make it perfect, right? That's something I definitely did. But off the daily time frame, there's not enough that's giving here for you to really say that I'm going to make this a solid rejection zone. Okay, so as of right now, all I can necessarily say is that there's a potential zone right there, but I'm gonna go lower to show y'all a different example, so that way you see a broad example, okay, instead of that kind. So looking at recent price action, when we add in support, so I do want to remind you, not a lot of support that's given right here, but I'm just showing from like, because every single stock's gonna look different. So I'm probably gonna go through a 3 or 4, just basically just using support and resistance zones because they're all gonna be seen differently. So as we can see here, that is your first rejection zone, okay? However, this occurred in March 16th, so it's currently April 5th or so. So yeah, so but with that being said, what we do know is that we can use this as a possible area for a rejection, depending on what price does, okay? And we can also see how there's 2 respective zones right there. So if you take a look at this area, you can see how it kind of respected the zone twice, okay? So with that knowledge, what you can do is stretch it across the map or the chart, so, which is hence why you see this rejection. This is also known as a rejection because price did not close under, and this is what we call a wick, okay? So this right here is what we call a wick. And these are what we call candles. Okay. So, or rather, these are what we call candles. So of course, red means bear, green means bull. These black lines are what we call wicks, and they basically just show where price was trying to go before finishing at its last location. So basically what that means is if you see price coming down and then like 5 minutes later it goes back up. What do you mean you can't see the chart anymore? Oh, oh. So for Michelle, can you still not see my screen? Because apparently everyone else can see it. So I'm trying to see what's going on with your screen. Because you might have to leave the come back in. Because if you can't see right now, I don't. But try saying that. Try leaving the webinar and come back in. But I won't say much. I'm just gonna show think based on the go ahead and do that. So for Wix, basically just means that
I can see you, but I can't see the screen. I don't know what happened.
So did you try leaving the chat? I'm sorry, did you try leaving the webinar to come right back in?
No, I didn't. I can do that.
Yeah, that's probably gonna be the best option.
Okay, I'll do that. Thank you.
No problem. So, like I was saying, let's scoop this out. Okay. So let's say the price came down. Okay, it is sold, right? And you saw a long candle. Then price came up, maybe like halfway. Then it goes back down to the next candle. This is basically what it's gonna look like. So you see this little area, that's what the wick will look like. So basically price sold off, comes back up, the next candle forms, then sells again, but it barely moves. Then it leaves off, whatever it does for the future, then it continues on. So that's just an example of how wicks are made and what wicks will represent. So, but the things when you go to the lower time frames, such as like the 15-minute, it's going to show you a more detailed view of what was currently going on at that moment. Okay, so for example, if I went to like the 10-minute time frame, and I zoomed out to that little projected zone that I had, then you're going to see. So now you can see all of that kind of formation in candles. Okay, so that's basically what's going to happen. So the higher you are, the more wicks you tend to see. The lower you are, the more candles you will see. So yeah, that is just the concept of wicks and all that kind of stuff. So back to what we were saying, or rather what I was saying. So potential rejection zone, right there, which is low notified. So that's your first potential rejection zone. So 1, 2, and then of course you had a little bump right there to make it 3, and then 4, 5. So what's going to happen here is that you can also see that price could reject because there's also look. But the thing is, you don't always want to force it, okay? But this is just what I'm basically showing in current price action is that you can see how there's 2 rejections. So price rejected here, shot up, rejected there, shot up again. So the wicks will tell you what price was doing, okay? So you also need to make sure that your rejection zones are on your wick. It needs to be wick to wick, but it does not have to be perfect whatsoever. Because if you try to make it perfect, then that's what's going to mess you up. So basically what I mean by that is you're going to try to move this all the way down there, but it does not need to be down there, okay? And like I said, your goal is to always make sure that you have at least 2 rejections, okay? 1, 2. And like I mentioned in the last webinar, but the more price the more price rejects in one particular area, the weaker the zone becomes. So basically what that means to me is that price can reject here and then come back down there and then just free fall because it breaks the support. But that's one possibility. Or price can come up here and then break through this resistance, come back down and add some support, and then come back up. Okay. So now the real question is, how do you know when to enter with support and resistance, right? So the real question is, depends on trend, okay, but that follow along with market structure. But if we're gonna just using zones, what you're gonna wanna do is, you're gonna wanna look at momentum and volume. But let's say you don't know what that is. Your goal is, do you understand fundamentals? Like basically tattoo check incorporation. I don't know what that is, but let's just say that we heard that they just won $1 billion or something, or I don't know, or LeBron invested into, this company. Those are pretty solid fundamentals, right? So with that background knowledge, we know that, okay, we are looking bullish on TTCF, right? So what you're gonna wanna do is wait for price to break out of this resistance, okay? Because the thing is, price can reject, come back down, they just shoot up. And you know what I'm saying? You don't want a terrible entry. So you always want to make sure and wait for patience on the chart. Because if you're gonna use charts, you gotta be patient, okay? So one thing about using charts when you're first a beginner is that you will miss plenty of entries because you're not gonna be fully aware of what you're doing, and that is fine. That's perfectly fine. But you don't need to catch everything, okay? But like I said, so what's basically gonna happen is price could sell off and then shoot up, or price could just break the right away. But when you see that full breakout and the body closes, then you enter, okay? And your target is always gonna be the next highs, right? So what I mean by that is basically, you can just make your take profit at 22, or you can make your take profit at 25. And why are those locations? Because those are the nearest highs. And basically, the goal of the market is always to either capture lows or capture highs, okay? So let's say that price, well, technically trend is up, by the way, but in terms of market structure, this is an uptrend, but your target would be the most nearest recent high. So if you were to buy in at 20 and you got an in the money contract to $22, then you would take your profits somewhere around there. Or if you want to swing it for whatever fundamental reasons you have, then you can hold even longer. So it just depends on you, what your fundamentals are, or why you want to hold the trade, or why you only want to day trade the trade. So it just depends on, or how fast the stock moves. So if you're dealing with Tesla, different story. If you're dealing with Apple, slow mover, AMD, slow mover, okay? So like I said, it depends on the stock, the momentum, volume, and what kind of fundamentals are being incorporated into the particular stock you're looking at. So that's just one example. But this one is has to do more with trend lines, okay? So this particular thing just has to do more trend lines, all right? So let's go take a look at it real quick. This is all we can see, right? So with that simple knowledge, this what we can see is that you want to know that we want to look at current price action, right? So the question is, what is price doing right now? And as we can see, price in the downtrend, it's not, but overall it's an uptrend. But what I would normally do is that I'll go to the past, okay? So even though I'm supposed to look at only current price action, that does not mean everything before that does not matter, okay? So what I mean basically is I'm gonna take this this trend line, and I'm gonna draw it across the map, okay? So let's say that you never saw, this area. You just saw price reject, and then you added this trend line, okay? You can keep the trend line right there. Then you're gonna ask yourself, okay, price broke structure. I'm sorry, but we're gonna go over structure in week 2. However, I'm just gonna mention structure right here. So price broke structure, we are now in an uptrend. So now our question is, where do we look to buy? Like I said, there's a lot of strategies out there. So it depends on what kind of strategy you use, where you're gonna buy. But me personally, I would only look into buying somewhere down there because of this institutional candle. but of course I would go to like different time frames to really tell me. But yeah. So anyways, I'm gonna let it play out, and then you're gonna see how the trend line works. So if I draw this trend line and you saw those two touches, 1, 2, you got your first two touch, right? And then basically now what's gonna happen is that since we already know that this was our first initial trend line, we also want to make sure we verify potential rejection zones. So of course there's one right there, there's another one up there. You can draw both, but you just want to see what really matters at that moment. So I'm just going to draw this right there to show why price will potentially reject the rentals because of this area. Okay, so with that knowledge, you can also see this up there and this up here. All right, so let's let it play out though. Then your first rejection occurred, of course, and then you're going to see how price rejected, which is why, you know, price shot up. So that rejection will be where you buy. Okay, so if you are bullish on TTCF, right, you would buy right there. Where will your stop loss be? Basically, like depends on what your contract is. Okay, so if you're using in the money, I'm sorry, if you're using out of the money, you can have you have a pretty big stop loss, but or 20%. It really depends on you. It just depends on you. But with my common knowledge of understanding market structure, I'm sorry, not market structure, just position entrance. Let's say you entered right there. Your take profit will probably be somewhere either up here, there's like a $4 increase, or up there. But just to get out of trade, I like to just get in and get out. Okay, but your stop loss would technically be right under this wick, because if price went under there, it's bearish in terms of my strategy. So I would not want to even trade anymore. Okay, so but like I said, we do have a 20% rule. But like I said, when it comes to charting, things do tend to be a little different. Like when you have a contract, your contract can go down like 20%, right? Probably because of Greeks or some yada yada nonsense, right? So the thing is, like, having a stop loss based off charts will be a little bit different than using just your simple contracts. Okay, so that's one reason I trade out of the money a lot, is because of I don't like looking into Greeks are very important, but I don't like looking into Greeks. I don't like looking into news and all that kind of stuff. So I just trade a lot of out of the money contracts, and I just swing a good majority of trade. And I do believe that if you were in UPS right now, you should be in a lot of profits, because we got in around 158, so 170. Pretty much we have a $20 increase right now, and we got in around 158, 159. So I'm sorry, $10 increase, $10. Not sorry, but yeah. What was I wrong? Either way. So that's just your first example of using, like, you know, stocks and all that. But even if you use previous price action and just go like this, you can also see that this is another location where price could potentially reject. Okay, so if you see this, it says so that line, the chart bounced off, would be considered resistance line. Yeah. So anything that's under the chart is what we call resistance. Anything that's above is, I'm sorry, no. This line right here is a resistance. Okay, this line right here is support. Okay, but another thing I want to tell you is why I'm still bullish despite seeing this is because, 1, market structure, 2, breakout wedge, 3, what's the rejection now? But if I just draw this all the way up there, even if I just drew like this, or just from right there, you're gonna see what we call a breakout wedge. Okay, so remember I told you about the if I see chart patterns, I'm gonna show y'all. So basically, this is the first one that we noticed, okay, or that I noticed. And let me just go ahead and make this right there. So let's just say we saw, let me see if I can find that chart pattern for y'all. I probably won't see directly, maybe not too soon. This is what it is. I mean, not a solid example, but this is on basic bilateral pattern, meaning you can go both ways. So technically, price is just in a wedge. But if you get this out of the way and just focus right there, let's just say I got rid of this area so you can't see anything above here. So let me just go ahead and edit this real quick. So let's say you can't see this area, right? But then you knew from previous price action that you had a line from the past, right? And a line from top and bottom. Then you're going to see that you're getting into a tight wedge. Okay, so basically, since this is also known as a bilateral pattern, meaning that it can go both ways, which is what this is showing you, is that you're going to enter after the breakout. Okay, so you can either have a breakout and retest. And what does that mean basically? This is what a breakout and retest is, that basically price either breaks out, retests on that trend line to act as support, then jumps up. Okay, or price sells off, retest, jumps down, or you can just enter after the breakout. That's more risky, but it can be done. Okay, so those are two ways that you can look into it in terms of entering within breakouts, or rather using breakout wedges and trend lines. So trend lines will help you identify chart patterns, but your eyes have to also see it on its own, you know. So, but let's say we took this out, and let's just say we hypothetically were bearish on the market, then you would sell right here. Okay, so basically meaning that this will basically your rejection zone. In other words, you're going to be expecting price to sell off to like right there. So that will be your target low, because this is your swing point. Another thing that you really want to learn is definitely you're going to want to understand your swing points. So that's going to help you identify your take profit zones. Because if you can't understand your take profit zones, then you can use fundamentals to help you with identifying whether or not will this stock be valued $14 within this time period, or will it be valued, you know, 22, or can it get this far? Can it get this low? Is it a good company? Is it a bad company? All that kind of stuff, you know, like a variety of reasons. So if you are not that good at looking out entry points, fundamentals can help you. But and the reason I quote can, because I mean, for the people who's already watched majority of my webinars, you already know that I do not like looking at news whatsoever, but that's why I say can. But I'm just saying that's just find a reason to tell y'all why you possibly can't look at charts, but in reality, I'm lying in that circumstance. No, you can't really use fundamentals to predict entry points in terms of charts. But if you want to do that, go ahead. But yeah. So like, but I'm not trying to encourage you not to look at news. You can do whatever you want. Actually, I'm sorry. I'm going to encourage you to look at news, because I do not believe that majority of people will actually put time into staring at charts as much as I did. So yes, read the news or read the articles, company reports, all that kind of stuff. So yeah, that is your resistance zone. This is above, okay? And then let's say I take another erase at this, okay? You're also gonna see how if I use what we call, hold on, let me see something. There's something I'm gonna show you real quick. Okay, so right there. So if you see this, you're gonna see how price, okay. There we go. So let me see, let me backtrack really quickly for y'all. Okay, so you're gonna see how I'm using this trend line, right? And you saw price technically rejected, okay? But the issue here is, since I understand market structure, I know that I would not buy here. So next week, you're gonna see why we wouldn't buy at this trend line, okay? But it's what we call a breaker structure. So technically, you just will not buy here, I'm sorry, because you're now bearish. So that's gonna show you why price went down. So what this basically just did was create a fake out. So people who don't understand market structure will try to buy. So one thing I'm gonna tell you is, the reason you can't just use support, resistance, and trend line is because if you don't understand structure, technically you're just randomly buying without understanding why. Okay, so this could be a good company. Okay, right? And for example, Tesla's a good company, right? But they sold off for like however much, right? For over $200, right? So if a company's so good, blah 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 blah, you know, why are we still off more than over $200? You know what I'm saying? But I'm not saying that circumstance. But either way, but that's just a perfect example. So with that being said, you can also see how there's a slight rejection zone up here. And you can even make one right down there. Okay. So let's say that we're looking at current price, which is now this located area. We want to start asking ourselves, where is our potential rejection zones? Okay. So now how are we going to find that? Is that we are going to find out by looking at where the zones are. Oh, and so with that being done, what I would do is I would go to the lower time frames. Okay. So I'll go to the 1 hour. Okay. Then I'll start looking at zones. Okay. So this is one. And then you can also start seeing how you can start incorporating like more trend lines and support resistance. So let me show you right here. Let me show you something really quickly. Okay, so technically you can just kind of draw a little zone right there, because you can see that 1, 2, and then that's your last third rejection. You can make it thick, you can make it skinny. Really, it's really up to you. But that's our first rejection based on current price action, right? And then you can make another one right here. Okay, so either you can wait for price to jump off this, come back up here and sell off, or you can wait for price to get under this zone, because that'll be known as what we call a break of structure to the downside. So either this your first option is for price to come up, or for price to just break through right down there. Sorry, that's the wrong one. Brush right there. So either one of those have to happen, and then when price breaks through, you can also add in another, what we call another zone. As you can see, there's potential rejection zones just about right there. So if you just draw it across and then price breaks through, you can also wait for a potential retest again. So the thing is, me personally, I always prefer retesting, okay? Because it's just safer, okay? I can't just enter the market like that. But yeah, so now it's the 1 hour to the 4 hour. So we're gonna let it play out. And as you can see, price almost broke through, but it didn't just yet. But as I mentioned, it's supposed to be a potential buying area. So technically you're still in the trade, right? So you'll be holding, right? Or you can buy them again, because you can have two positions. Either you buy there or at that zone on the bottom. Is it because retest? Yes, retesting gives me a potential showing that price is struggling to go back up. So when price retest, because let's say price broke this trend line. As we can see, price finally broke the trend line. So basically what I would like to see is price come back and retest this trend line or retest the zone. Okay, so if it retests any of those kind of things, then I'll look into enter. However, sometimes price won't go all the way back up there. So you gotta like look into other potential entries or zones. So of course you go to lower time frames, you will find more zones to go off on. So but as of right now, we can see our price already rejected off this area. So if I go to the lower time frame and I know that we are bearish, then like I can see here how price broke structure, but that's kind of the area that I'm off. But let's say that this area was not there. Okay, this area, but this area was. Then I would say I would enter right there. Okay, I would enter right there. So let's say we enter at 2366. Let me check the volume really quickly. Okay, 2366. Then that was our first initial rejection. So now we're just gonna let price play out. But I look into having 2 entries here. Okay, so I would say my target zone is down here at 21 in the money. Okay. Remember I told you, you always want to go for swing points. You're on low and high. Okay. So that's the most recent low. So I would try to sell it from here to down there. And you kind of see how price is just kind of retesting this area again and again. And yeah, so you can see price just rejected pretty nicely. Then you hit your take profit, you know, and just like that. So that's a really simple way to use support and resistance zones, but you got to make sure your eyes catch the trade. I'm sorry, not the trade, the zones. Because the thing is, let's say I didn't put that there. The thing is, if you didn't catch this area, then you would have just missed a trade in general, or rather, you would have never noticed it. And then this is a bearish play. Yes, correct. This is a bearish play. Yes, so it's a sell. So basically, if I didn't notice this potential rejection area, like right there, then I would have never sold. Okay. So let's say that we would have just waited for price to break through this. Now we got to figure out and tell ourselves where in here can we enter to sell. So when that happens, you got to go really, really low. Like I'm talking like to the 5-minute time frame. But what's basically going to happen here is this is where the sell-off occurs. So but of course it gets a little chunky. So technically, okay, so technically when that happens, there's better stops than this that will give you better entries than this. But if you see this 2 rejection area and then price shot up, you can see that was a rejection zone, right? So if you come right there and then zoom in, you're gonna see how price came up. Well, if you go to lower time, you will see how price came up. But on the 10-minute time, I'm sorry, on the 10-minute time frame, it does not show that. But if you go to the 5-minute or like even the 9 or 8, it's gonna show that. But I think the candles are not gonna look as good as clear. So it's gonna be a little like chunky, funky, what all that kind of stuff is. But I can see this little indication where price came up, but it's not clear enough for me. So yeah, so that's 2 minutes. I can go to 10. Oh, so that was there. So yeah, so yeah, right here, as you can see, that's basically how we would enter on the momentum trend. But the thing is, like I said, you are able to just wait for what we call, what did I call it again? A breakout. So, or just a breakthrough. So this is your support. And once you see price breakthrough, you can just enter. Okay. But that's not something I do. I hardly ever do that. If you want to learn that kind of method, you're gonna have to talk to stock trader. That's what he calls himself in the group chat. He's also one of the admins, but he does this quite a lot. That's his particular method. But I just think it's unsafer because technically it's more riskier. But it does tend to work. It does. It's just if you want to do that, you can. But that's basically how you would enter based off on just using your market structure. I'm sorry, not market structure. Support resistance zones. Now, let's say we want to use. Let's say we want to use trend line. Okay. Then let's say I think we're gonna go to maybe let's see. Let's see. Let's see. let's take a look at maybe Snapchat. So entries with just trend lines, same concept, except trend lines can be a little trickier. Okay, so let me do this a little bit more to find out. Right there. So as you can see here, if you need to, how do I put this? When you learn market structure in week 2, you're gonna see why you would sell Snapchat around this area. So 1, we have rejection zone. Okay, and why? We have 1, 2, and then 3, 4, and then 5, and then like 6, and so on, right? So now we can see a price kind of finally retested this area. And if it becomes a little higher, that'll be a little bit more ideal. It doesn't have to, but it can. So what basically happens is the price could come up there and then just sell off to like 48. Okay, not saying it will, I'm just saying it'll be hypothetical or rather ideal. So of course your target goal will be 47 because we are currently in a bearish with Snapchat. And to add more into that, you can also see if you just do this, if you do this, you can see how price can come up here and also reject. Okay, so now you have several confirmations to a bearish market. And why it's also bearish is because breaker structure, retest, entry off the order block. You're gonna learn that later in week 4. You'll learn that in week 4, but yeah, order block entry. I'm sorry, but that's gonna be learned in week 4. Okay. Yeah, so that is your first rejection zone. That's an order block, and then this is your first. You're gonna be your first. What do I call them? So what is it called again? Your first. So that's your trend line, which shows that. So if I take all this out, okay, I'm just gonna erase everything again, and I'm gonna do it again. First, you want to take out your trend line and go to your most nearest rejection zone. Okay. And you can just do this if you want to, or you can just go to the most nearest. And what I mean by that is that you have 2 options. Okay. Either you want to force a trade or you want to be patient. All right. And what I mean by forcing a trade is, look, so if you put it right there, that's the first reject that occurred, which means that it seems to be the most reasonable, right? But if you put this one, you're only doing that because you know it's rejecting right there. In other words, you're trying to force a trade. So if I were you, just do this. And then it gives it a little bit more room to kind of move. But then if you want extra confirmation, look for another rejection zone. So you can see right there. So technically, you would like to sell somewhere around that area, okay? But then you can also see that there's a rejection zone right there. So if you just put this across, you can put it across the map. And then you can also see how that's a rejection zone. And then when you learn week 3 order block, you're gonna see why I'll wait for price to come up there and sell to the downside. And then of course your take profit will always be the next low, or you can do a day trade, all that kind of stuff, you know what I'm saying? So that's one. So that's just gonna be another example of how you use, using trend lines and all that kind of stuff. Or you can also go back to the past and take a look at how price was used. So remember I told you, always look at previous price action. So let's say that you saw Snapchat and it was March 8th and you're on the 4-hour time frame. Then use the trend line. You put it to your nearest zone, then you put your price right there. So when you know this, when you see this, you can say that, oh, we are currently still in a bullish market because this is where your swing points are. and then of course your broke structure up there. So right there, that's your swing point, meaning like your higher highs, higher lows, higher highs, but that'll be week 2, okay? But I just need to identify it right now to help, so it helps you understand why I'm mentioning it. But that's what's gonna tell me that we are in a bullish market. Okay, so of course we would possibly buy right there, and then will be your take profit. Uh, 68. But then also make sure you're considering what the stock is, okay? So make sure you understand what the stock is, and what I mean by that is it Microsoft, is it Tesla, all that kind of stuff, right? So if you're dealing with Teslas, can it go from 54 to 68? Can it go from here to here? You also want to ask yourself those kind of questions, you know what I'm saying? So that's also to help you identify whether or not where you want to take profits and all that kind of stuff. So as you can see, this is where I would have bought because it held structure. So I would have bought here. Let's say I bought 2 contracts. I'll take my first target right there because that's the rejection zone. You see how price rejected several times right there? Rejection, 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 several times. That's basically where price rejected several times. Okay, so that's a rejection zone. So basically what that means to me is that if I had 2 contracts, I would, yeah, I would consider, yeah, I would. Yeah, I would. It just depends. It depends. It just depends on the stock as well. But since I see that this is a rejection zone, and I have 2, let's say I have 2 entries, I'll take profit around here. That's the first entry, and then swing the second one until I get something different to get out of the trade. But in the meantime, let's see if price ever goes back up there, which I don't know if it does. But no, as you can see, so it did what I wanted, and then it broke through. Okay, so remember what I told you about? You can enter on breakthroughs, but the reason it's risky because you can see now how it's trying to shoot down dramatically. So let's say that you didn't enter the first trade, okay, which means that you didn't enter off the trend line, and then you try to enter after this breakout. Here's what's going to happen is that price breaks through, you did not wait for a retest. So me, let's say I didn't enter here, but I try to enter there. The reason I would not enter there is because one, I know we're in a bearish market here after this particular area. Well, actually, technically, we're still in bullish market. So how do I put this? We took profit on our first contract. That's one. I'm simply going to say volume. I know why I would not buy here. It's because of volume and momentum and volume. As you can also see, just a huge candle. So, which is technically one of the reasons why price is kind of falling through, right? So you see this huge candle to the downside. You can see the momentum starting to favor sells. And what is momentum? Is basically the size of the candle. So, and what I mean by that is basically, if you take a look at so let's say you're trying to sell. Let's say you're trying to sell, right? And trying to see the back. This area is just too compacted for me. All right, great. So let's say you are trying to sell somewhere around here, hypothetically speaking, okay? So I'm sorry, yeah, let's say you're trying to sell because you think that Snapchat is getting high and all that kind of stuff. So if you try to sell Snapchat, the reason you do not want to sell is one, do you see this big candle? That means momentum. Okay, if momentum is looking that, you might as well just follow the trend or the trade. So I know I'm not telling you because you see a big ass candle. I'm sorry, because you see a big candle does not mean you enter. Okay, it just means that momentum is favoring the upside, or it's going with the upside, it's going with the uptrend, all that kind of stuff. But the thing is, I only use candle size to indicate whether or not I will enter a trade. Okay, so that's what I was saying basically on the 1 hour, was that the reason I would not buy again here, we're in the 4 hour. Yeah, we're in the 4 hour, right? The reason I would not buy again here is because of the fact that you see this huge selling candle. Yes, it did reject, but then what happens after? It sold off again. So I took profit on my first contract. Okay, and then I'll probably get out around here. I'm starting to see too much selling momentum. Because why? There's this thing where it's called it's just simple math. 1 + 1 = 2. 2 + 2 = 4. So basically, what I mean by that is you're gonna see how 1, 2, 3, 4, 5, 6. You're gonna see how. Hold on, let me see something real quick. 5 bars, and then okay, let's leave this example out for now. Momentum. Let's just leave it at momentum. All right, momentum, whatever it is. I was gonna tell y'all that there's a little 1 + 1 things, is that it's really helpful, but I'll say for week 3. So either way, we're gonna let it play out. I do know that we're currently I took my first target of profit right there because of the fact that I saw that momentum possibly coming down there. But the second one is we're still technically in the trade. Either hits break even or I get out early. I would get out early because of how momentum looks. Okay, so now I'm sure to let it play out. And then as you can see, price continuing, like, give strong indication of selling markets. And of course, we had a break of structure again, and another break of structure right down there. Well, not yet, but almost. But it's also a rejection zone right here as well, which is why price broke through, which is why price bought up again. So first indication of bearish market is actually right there. But if we're using swing points, we are still, so if I'm using retail, I use swing points. If I'm using institutional zones, I use break of structure. Okay, so break of structure basically means that I would sell up here, which is why price sold all the way down there. Break of structure again, I will sell up here. But if I'm using retail, all I would simply do is wait for price to come and reject around these zones, or like sell somewhere up here. There's also another rejection zone up there. But like I said, your eyes get used to it. You probably won't notice it right now, but your eyes will get used to them like very soon. It just depends on when you kind of learn them. So yeah, it just depends. But what else do I also have here? Okay. So yeah. That is one example. So is there anything I'm forgetting? So lastly, crossfire. I'm probably going to use, let's just use IQ. Like for example, do you see this candle momentum? You would not buy right there. Okay. I don't think I was trying to buy here. I think I was trying to buy from right there. If I'm not mistaken, then yeah, this was right. But then I don't know about this particular area. But let's just go to something else. Nah. Oh. Okay. So it's gonna do this one. I don't know what it is, but we're gonna do this one. So yeah, same thing here. Chart pattern, bilateral pattern like that. So like I said, price breaks out, retest, sells off, take profit down there, but it hasn't hit it, or you can just go down there. It just depends on you. Also depends on the stock. Okay, to go from 33 all the way to 22, that's a lot of money. So me personally, I would, yeah, for Ryan, for your question, Forex, crypto, whatever it is, if it has a chart, it doesn't matter. It's all gonna be the same thing. You know what I'm saying? Like if I take it to Bitcoin right now, it's Bitcoin's not any different. You know what I'm saying? Like this a retail formation, you know, Bitcoin is like, it's not any different. You know, same thing here. This is more of an institutional zone. And then I forgot which one I kind of have here. This was another institutional zone. So all these lines mean something, but I just haven't demonstrated. These are not resistance zones. Okay, none of these are resistance zones. I don't use that stuff. But I'm just teaching you the basics so far. Like in week 3, you're gonna see what I really do. I use bank numbers and institutional trading. That is how I trade. And sometimes I use chart patterns if it's just really noticeable and I can't see anything else, of course, and Wyckoff. But yeah, the reason I said it's going to 62, 61 is because it's pure accumulation, really pretty, all that kind of stuff. But let's go back to this steps, okay? So crossfire. All right. What do I mean by crossfire? So, well, before we go there, breakout wedge. You wait for a breakout, retest, sell off, take profit. All right. So now the question is, what is a crossfire? Or rather, what is the star mark there? Blah, 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 right? So that's a great question. What is that stuff? Okay. So basically, it can get messy, but just make sure you're using it to a reasonable understanding. So if you're really logical with it, it can work for you. But if you're just being stupid with it, I don't mean stupid, like the word stupid, just like you're just being irrational with this, it's not gonna work. Okay, so what I mean by that is basically you're gonna take a trend line. That's the first you're gonna do. You're gonna take a trend line and you're gonna make it hit 2 rejections every single time based off your first input. So, and then you're gonna keep doing to every single location you can possibly get, right? And that's gonna show you, you're gonna see how price literally respects it every single time. All right. So you can see how if you just make these 2 rejection zones and draw it across the map, what happens? Price rejected here, bought, rejects down there, bought, whatever, you know, all that kind of stuff, right? Now if you do this, of course, you're gonna go all the way up there, but you can save that for the future. And then, like I said, it can get messy, but if it's your own chart, it won't be too bad. You know, same thing here, right there. Let's see what else we have here. There's not a lot of price action here, so I can't really do too much, but what else do we have? You also have trend line right there. And you can see the breakout, retest, sell, another way to enter right there. You can also just do this too. And then you're gonna see how price came right down there. If you take a look at that, retest it, sold off, take profit zone. What else do we have here? If we just add this up there, if you add this up there, you're gonna see how price sold, retest, sold off. So basically, it's taking the trend line and just toss it into the chart, right? In any given zone, anywhere you go, no matter what. Okay, like there's gonna be some type of rejection going on, right? But it's basically gonna be your job to make sure that you can actually see what you're really doing. Okay, so make sure you're being really logical with it, because if you're not, then you won't really know and all that kind of stuff, you know what I'm saying? So that's just something that you really want to make sure that you're learning and using, because it's really beneficial. Or you can also use what we call what is it called again? A fan. I mean, the colors are a little bit different, but sorry, that's too much colors, right? But the colors will be a little bit, but it will help you with potential zones. So let's start push it all the way up there. Then did I mess it? No, this one right there, and then like right there, and then you can just take a trend line and draw for every single indication, so that way you can get the colors out of there. And then right there, so you can just draw lines on every single one of them. And then it's like, it's going to help you, like look for zones. So like I said, trading view is going to give you all the tools that you need. So that's why I usually don't advise using the brokers like Webull and all that kind of stuff, because if you have all these tools, like why not use them? So but yeah, there's a lot of things on here that you can use that will help you with identifying a lot of things. Once I got rid of this web, but you can see how I just do this, and then boom, that thing from that fib thingy went all the way across right there, and then of course you can see a potential rejection zone up to the upside to buy. What else you also use for I think it's gonna be, let me see if I just raise everything. I think it's the trend time-based one. It's basically, I'm just making sure. Is it in the most recent high? I forgot which one. It's not that one. Is it the data, the trend date? Ooh. I don't remember the other, I forgot what the other one is. I don't think it's the pitchfork, but we'll see. I mean, this can help you too if you wanted to, but I really think it does much. But it will help you see additional trend lines. If you can see right there, you can see how basically I hold on, like right there, put it from the high to the low, okay, and then you want to make this, you want to set this at your lowest point. Delete this crap. And then of course you put it right there. You don't want to do that. You just want to put it to where it's like realistically making a zone. So where it's basically, shaped like that or like that. So it's either you have it like, whatever, just, let me just. Okay. So you sort of put up the zones where it just look like potential rejection zones. So it's going to help you out with that. So as you can see, just prices rejected and all that kind of stuff. I don't use that stuff, so you would have to YouTube that because I cannot teach that part right now. I just know what they are used for, but I don't use them at all. I think the GAN box also did the same thing. Actually, not really. Well, like I said, bunch of tools. Figured that one out, but I think the pitchfork is definitely useful. Like, yeah. This is the one. This is the one. Okay. So what you want to do is draw from the high to the low. And then you want to just stretch it across the map. All right. So when you stretch it across the map, you're going to see how you can also see how there's potential rejection zones here and there, like sell, buy, all that kind of stuff, you know what I'm saying? But that's just potential ways to also look at it, So it just depends on what tools you're using. But me, I like to keep it simple, so just use simple, either star method, rejection zone, all that kind of stuff is really up to you. And if you're not good at looking at rejection zones, I did see that little tool, which they call it the, this can also help you with, what do you call it? Chart patterns. Yeah. So let's say you're not really good at identifying your, you're not good at identifying your chart patterns. This can help you identify like things such as like your head and shoulders, So it's all up to you basically how you want to learn that kind of stuff. But like I said, you have all the tools that you need, right? And it's all there. Of course, you have the reverse ones, and you could just make it look, you can just put it under, and so on, whatever it is, right? I forgot what else is there, but this also helps you with like noticing some patterns, So like I said, it's just there. So you need to find out which strategy you want to use. Why do you want to use it? like all that kind of stuff. So yeah, like I said, just freestyle it, but just make sure you get on tradingview.com, okay? So it's literally called www. While I'm typing this up, does anybody have questions, by the way? You can type it in or, so yeah. But yeah, it's gonna be tradingview.com all the time, which is right there. You're just gonna click it, make sure you create an account. You can also download the app on your phone, iPad, all that kind of stuff. Yeah, make sure you create a free account. I do have the pro version, which is why I have all these time frames. But on the free version, I'm pretty sure you only get to like the 1 minute, 5 minute, 30 minute, 45, the 1 hour, the 2 hour, the 4 hour, the daily, the monthly, the weekly. I think you get the 3 hours. Well, I think you get 1, 2, 3, and 4, I believe. But it's been a while since I had the regular version, so I'm not necessarily really sure how they necessarily look. So, but that's just a good example of that perfect example. So, but yeah, with that being said, does anyone have questions in regards to support resistance zones, even entries, all that kind of stuff? This is also recorded, by the way, but yeah. Let's see. Questions anyone? Let's see. So no question over here. It says okay. So for Ryan, to answer your question initially, basically, what I'm going to tell you is what will be the best way for you to improve on it, right? Because I'm not going to tell you mine, because mine is just like skipping class, right? Because I'm in a master's program right now, right? But I started learning how to chart my senior year, and I stopped going to class, right? And I would just study the market up to 6 to 12 hours a day, watching videos, memorizing chart patterns, whatever it was, I never had a C in college or anything, or B's. Then I got my first C's and B's, so, but I'm not going to recommend you doing any of that kind of stuff. But for me, what I would tell you is, if you want to break this down to like more simpler terms, you got to understand the market inside out. So you got to understand why wicks do what they do, what each candle represents, candlestick patterns. But the thing is, majority of that stuff does not matter. But if you really want to super good understand the market, I do suggest that you learn every single one of those. And of course, you can also go to YouTube, or you come to me, or if you go to the chart teacher place, there's also notes in there. And of course, I'm going to send you a homework as well for people who are in the webinar. I'm going to send a chart teacher place, and then for just based off support resistance and trend lines, and then you will do the homework to also help you improve, and I'll grade them. I grade them really fast, so send it to me, and we grade them, get them done with, and all that kind of stuff. Where do we? It's called Everything's in Chart Teacher Place. It's Chart Teacher Place. Literally, if I share my screen right now, let's see. All right. Where's new share? And it's this desktop number 2. There we go. So I believe y'all can see this screen. Anyways, yeah, so right here, Chart Teacher Place tends to have majority of everything you need. Yes, of course, if you go here and you scroll up, you can also see like market structure, week 2 PDF. That's from, or notes based off how to. It's gonna have all the what you call it? I forgot what they call it. Chart patterns and all that kind of stuff. And then the more you scroll up, there's going to be more stuff up there. Of course, a lot of before and afters. I would definitely study these before and after and see how I found them. So if I click like, you know, these SNDL, some of them might have interesting outtakes or all that kind of stuff. So yeah, so this is like another PDF that you can take a look at. I believe this has, let me see if I can get it popped up. Preview. Let's see if I can get this out of the way. This one is a bigger screen. So let me do new share. Let me see. New share right here, desktop number 3. So as y'all can see here, this is gonna be like another thing that's gonna, I never read this book. It's just, I'm just assuming that it's gonna work, you know. And of course, it's gonna have like, you know, a bunch of stuff, you know, all the things you really want to learn. Yeah, 224 pages worth of information, all that kind of stuff. I never read anything regarding market. I literally just chart, watch videos. I don't like reading books or anything. So yeah, you know, so that's that. But yeah, so it's also going to teach about support and resistance zones, like all that kind of stuff, the mental node trends, you know, all that kind of stuff, chart patterns, where you want to enter, you know, head and shoulders, support levels. Also going to teach you volume as well. So when it has high volume, low volume, the book is in the chart teacher place, just like I said. So like I said, I sent plenty of things in there. It's just whether or not you use your resources or not. So it's all in there. And of course, you know, as you go through this kind of stuff, you're gonna see it's gonna be a variety of information. But like I told y'all, I don't use any of this stuff. Okay, so I don't like reading. I don't like it. It's just really boring for me, you know. So oh, let me show you the screen as well. How do I show my screen again? So new share, I'm going to show you the screen again, desktop number 2. So you also want to look into here and also see, I also have additional notes here on market structure and all that kind of stuff. And this was the very first market structure video on technical analysis, which has a PowerPoint. So if you want to click it and you can watch it and all that kind of stuff, I think it was about 35 minutes or so. And I'm just going through a PowerPoint.
Proof of confirmation.
You know,
so let's say I drew a support right there.
Yeah, so like that is one part, you know what I'm saying? So that's that. That is also there. You know, more chart patterns, more technical analysis, all that kind of stuff. You know, so there's a lot of things in here. You just gotta scroll up. Everything's up there. Just scroll up there. You'll find more stuff. You know, so yeah. And then you're also gonna see some walk off here, you know, notes, and you're gonna see how I look for things, you know, all that kind of stuff. So yeah, more notes up there. This is called walk off. This is something you really want to learn if you have time, all that kind of stuff. So yeah, that is that. I'm gonna answer the other question. Someone asked me, as far as setting up a stop loss, I'm brand okay. So as far as setting up a stop loss, right? How would I put that into option trading? Under limit or stop price? Okay, Charlie, that question really depends on the stock, because the thing is, like I told you, it depends if you're getting in the money or out of the money. Okay, so if you're getting out of the money, that really depends on whether or not you are in the money or out of the money. Because the thing is, remember I mentioned earlier in the chat, I'm sorry, in the webinar, that you can get in the money and the stop loss on your chart can be like just $2, but in the money that could be almost 100% of your trade. And the thing is, why are you gonna risk 100%? You know, so so it really depends on the stock, what the Greeks are doing, you know, all that kind of stuff. But sometimes the stop loss is not gonna work in your favor in terms of how you perceive it in a chart, which is why I tend to get out of the money and just buy a lot of contracts. You know, so and when I say out of the money, I don't mean super out of the money. I just mean like reasonable contracts, you know what I'm saying? So, because I'm a heavy swinger, you know, but I could also day trade a lot too. It's just, I try to keep everything cheap solely for cash capital. So the thing is, if I just want to trade Apple, I can, or Tesla, I can. But the thing is, I look at everything. You know what I'm saying? So I try to find the cheapest place. You know, so but yeah, yeah. Let's see. It was questions that I missed. That was any other question. Yep, it seemed like I have questions so far. So would anybody else have any questions? And I will also post this video into the chart teacher place and go from there. So yeah, but anybody with additional questions, it's absolutely no problem. Yeah, but if you don't have any other questions, you can also, of course, just start leaving the webinar and go from there. And no. Maybe if I feel bored tomorrow, I'll have a live on, whatever it is. It says, is that chart making sense? Wait, what? Hold on. Okay, it says, is that chart making exist? Wait, what are you asking? So the chart predictions you're making, what about them? Which one? You mean, what are you talking about? No, do you mean like, okay, so how long has what been existing? What charts? Because trading has been available since almost 1990s or 1973 to be exact. So that's why I don't know what exactly you're asking. And if you want me to go even more into stocks, it's actually been available since, say, 1870. Yeah, so it's actually been available since currency exchange began. Like Forex technically started in like 1800s. I just don't remember 18 but stocks now, they started like in 1973, I believe, or 1978. Charts came out around 1993, I believe. And then of course, everything else is just flowing. Yeah. I don't know. I don't really have internet in 1970. All I know is that the idea of exchanging stocks and all that kind of stuff began in the 1970s, which is 1973. I don't know if that, I think I have internet in 1970. Actually, I don't know. I don't remember. You know what I'm saying? In terms of America, like I don't really care about that kind of stuff. What I do know is that that is when stocks and charts and all that kind of stuff began. And but I do know that trading view and charts and all that kind of came into live around 1993. You know, all that kind of stuff. Or yeah, 1993, 1997. You know, because if you look back into Apple, you are gonna see. Well, I don't know about this particular app on TradingView, but I know that it dates back to Chevron goes to like 1970s, you know, all that kind of stuff. But I don't think Apple in particular on TradingView goes all the way back there. I hope it does, but yeah, this one goes to 2016 for some odd way. Okay, there you go. So yeah, like you see, 1981 was when the company was found, right? But all these significant data wasn't really jogged out until probably like around 1990s, because that's pretty much when there was like indication in the market. But then of course in 1984, you can kind of see all this kind of stuff, right? So of course, Apple's been out for quite a while, 10 cents, all that kind of stuff. But Apple didn't really blow up until like the late 1990s, I believe, sometime around there. So as y'all can see here, this is where Apple's like under 10 cents or under $1. So yeah, cheers to people who bought it up back then. But you know, we were all kids back then, at least some of us was. Yeah. So yeah, it's been quite a while. Been a long time. So yeah, like I said, who knows what happens there? But what I do know is this stock's gonna keep rising for quite a while. So something to definitely invest into if you can. Yeah. But yeah. You say you started with a class. No, it's not. No. What I meant was I was skipping school to learn the market. Like I stopped going to school, I stopped going to class. I always show up to class for testing days. And what I'll say is I don't recommend it whatsoever, you know, because the way I learned it was not, because remember, I do Forex more than I do stocks and options. Like if anybody asks me which one I want them to trade, I always say Forex because you can, you can build wealth a lot faster in Forex. But the thing is, it is way harder to excel in Forex than it is, because I think stocks and options are very easy. Okay. I still don't care to trade that much, but I do. But my thing is like, only just because I have the funds to just easily replicate money. But yeah, but yeah, Forex, you know. But yeah, if you're looking to make, I'm talking, if you're looking to turn $900 to 100K in 3 days, Forex. I've seen it happen. Turn $27 into 5K, Forex. Anything gets in a short period of time, Forex. You can do the same with the options, but you got to find that stock. You know what I'm saying? You got to, but the thing is with Forex, you don't have to find crap. You can literally just use your skill set and do it yourself. You know what I'm saying? So that's the thing. That's what I keep on saying. Like, quick profits, Forex. Long-term profits, Forex. But of course, options sometimes, you know, here and there. But yeah, that is that. But you know, we all have our preference and all that kind of stuff. You know what I'm saying? But that is that. You know. So it says, what is your opinion on our platforms? Don't use it. I literally do not believe in, no one can predict. I'm sorry. There is no robots that can predict the market. There is nobody that can predict the market. It's literally just free fall market that's being controlled by banks, institutions, and governments. Okay. So do you think the government's going to make a bot for us individuals, regulars, retail individuals to excel in the market? The answer is no. So why would you use them? You might as well just learn it yourself and excel in the market. If you use them, you better have a lot of funds. I'm talking about you better have buku bread, meaning a lot. So if you're going to have something else trade for you, good luck, but no, I don't believe in those things. I also would say we're creating a bot or we're creating this to help you take trades. That's usually who you want to stay away from. All that kind of stuff. No, it's all crap. I mean, some of them are good, but when I say good, I don't mean like, but the thing is, you need to understand that they have tremendously huge stop loss to the point that it might look like they're winning all the time, but they're not. So their ratios are pretty terrible. So what I mean by that is, so you can have like a 20 pip stop loss, take profit, right? And a like 80 pip stop loss. So the thing is, if it goes down 60 pips, technically you're in loss, right? But it comes back up and you take profit 20 pips. Oh, they hit TP, but in reality, that's a very stupid trade. And that's kind of how options work, which is why I'm not so fond of it. I'm still gonna trade it because it's an investment proportion, but it's kind of like just being down the whole time until your trade comes back a lot. You know what I'm saying? Like that's how I see our robots, which I think it's just dumb. So what's the point of just being in drawdown where you can just be in profit and either buy or sell? Because the thing is like that's what charting is all about. So instead of being down with the original mass, you're just gonna be in profit. So if I know structure is bearish and people are buying here just because they know stocks is all about holding and all that, I'm gonna be like, well, if I can make money going the opposite way, why would I just buy up here, you know, so all that kind of stuff. But yeah. Mm-hmm. So yeah, that is what happened. But yeah, any other question? Something I think I forgot something. I don't know, but yeah. Yep. But yeah, stay away from those. But yeah, it seems like of course, if no one else has questions, then of course you can leave the webinar. And then while I'm waiting for the question, I'm gonna give it about 3 more minutes. So yeah, just to go ahead and do that. So while I'm just waiting for y'all, so you know, put my watch back on. Absolutely, no problem. Let's see. Alrighty. Yeah. So I guess I get up to 4:50 exact. And then of course, if no one has a question to answer, then I would just go ahead and end the call. And then yeah. So yeah. So pretty much we got 1 more minute left. So no, your next webinar is going to be this Saturday, actually. Well, I'm gonna ask a question in the group chat and ask people, would y'all rather just have me have a webinar every Monday or every Tuesday or every Saturday or whatever it is, you know, it just depends on which one, what preference. So I'm gonna see if I can do a poll and just see what majority of people in the chat says. I don't know if there's a poll option on Discord, but if there is, then we'll go with that. So we'll see. But yeah, thank you for asking that. Yep. All right, so we got 1 more minute or less than 30 seconds, I believe, and let's go ahead and close what that is. All right, so it's now 4:50. So 5 more seconds before I end the call. So 5, and then you're 4, 3, 2, 1. All right, y'all have a great day, great night, whichever it is, you know, enjoy your day. And I will see you in the chat if you have questions or, you know, wherever else it is. But yeah. All righty. Goodbye, everyone. I'm going to stop sharing my screen real quick. Which screen is it? That's one right there. So, yep. All right. Perfect. Let me click end and stop recording.